Special webinar. I'm Terry Ryder from Hotspotting, and today I'm here with Mark Shorrock from Bluestone Property Management, one of the most knowledgeable people about what's going on in Brisbane real estate. We're going to be talking about what's a great time to buy in Brisbane. And I think perhaps because Brisbane hasn't done in recent years what Sydney and Melbourne has done, it hasn't had a major boom. I think perhaps some investor owners in Brisbane have become a little bit disheartened and wondering whether they should sell. And our message very much today is no, don't sell. It's a time to be buying in Brisbane because we think better times are coming to the Brisbane market. As we'll discuss today, it's very important to understand that in real estate we don't have just one market in Australia, notwithstanding the fact that media keeps telling us that we do. They keep talking about the Australian property market. They tend to extrapolate what's happening in the two biggest cities across the whole nation. And the reality is that we have very different scenarios playing out in different parts of the country. Sydney and Melbourne had their boom for specific and clear reasons. Brisbane hasn't today, also for very clear and specific reasons, but we do believe it's changing. So that's what we're going to be talking about today. Stay tuned till the end of the webinar. There will be a special offer from Bluestone and also an opportunity for you to have your questions answered. So if you do have questions throughout the broadcast, tap in your questions into the Q&A panel or the chat panel, and we'll do our best to answer them towards the end of this 1 hour broadcast. So Mark Shorrock, welcome. Tell us a little bit about who you are and who Bluestone is and what you do in the Brisbane property market.
Yeah, thanks, Terry. Thanks for having me today, and welcome to everybody. Appreciate your attendance for this webinar. I'm a second-generation agent. I've been practicing hands-on myself for about 21 years. I've been fortunate enough to work in all aspects of the industry, all the way through from reception, property management, sales, and come back to property management again now. I guess that has given me a bunch of experience, and I'm a big believer in that there's no substitute for experience. If you've rolled your sleeves up and got your hands dirty and been through what your staff are doing every day, it gives you a much better understanding for the market and plus to come up with solutions and solve problems. At Bluestone Property Management, we are a company that specialises in managing residential properties in the greater Brisbane metropolitan area. Our core focus is on maximising returns for our investors, and we do that through a couple of key ways, and basically is get us the highest possible rent in the shortest amount of time frame, and we maintain the properties to the highest and best value so that our investors can tap into the equity within those properties. But should their circumstances change and they have to sell, then the property is worth as much money as possible. We have been fortunate enough here. We manage around about 400 properties for people from Caboolture, Narangba in the north, out to Ipswich, Springfield Lakes in the west, all the way down to Yarrabilba, Coomera, Ormo, and in the south, and out to the Bayside in the west and in the east. Terry, that's pretty much about myself and Bluestone in a nutshell.
Okay, thank you for that, Mark. Well, we're here today to talk about Brisbane, and obviously Brisbane has been chugging along over the last 5 or 6 years, while Sydney and Melbourne have been having their spectacular booms and then the correction. Brisbane's been doing none of that. It's been simply what you might call a normal market with steady activity, and specific areas have had some pretty good price growth, but across the board, the generalised numbers don't show a great deal of growth across Brisbane. But I think you and I agree, Mark, that that's changing, and in the next couple of years, I think we're going to be seeing much better times for people who own property and real estate, and that's also supported by some of the forecasts that's coming out, which we'll talk about in some detail a little bit later in the broadcast. But how do you see it as someone who works at the coalface of the Brisbane residential property market? What are you finding, Mark?
Yeah, Terry, thanks for that. We are actually seeing that, I guess, as the forecasts that have been predicted within the market are slowly starting to leach through. We are seeing some albeit small, increases in the rental returns that we're achieving for our investors. We might only see an average of a 5 or 10% increase at any given time in the current market. And like I said, albeit small, that's extremely positive considering that a lot of the people who have owned investment properties in Brisbane for the last sort of 5+ years, or anywhere up to 5 and over 5 years, potentially up to about 7 or 8 years, have seen little to no gains at all. If anything, they've actually been unfortunate to go backwards if they've fallen out of the peak cycle and supply and demand hasn't been in their favour. So I think that the forecasts that have been predicted, the writings on the wall there, it's fairly well documented. There are a lot of industry experts and key economists, drumming that message home. And as for us on the coalface, it is really, I guess, positive to see that it is translating into positive gains for our investors.
Yeah, I think it's important for and people to understand that property markets rise and fall for specific reasons, and it's very clear to us at Hotspotting the reasons why Sydney and Melbourne had that period of outperformance that didn't happen in, say, Brisbane or Canberra or Adelaide or Perth. So what I'd like to do today, Mark, is talk about some of the specific factors that do create upcycles in property markets, some of the things that perhaps have been missing from the Brisbane market over the last few years, but which we see is now starting to fall into alignment, which is why we're a lot more confident that Brisbane is going to be a growth market moving forward from this point. And perhaps the first thing we could talk about is population, in particular interstate migration. It's very interesting to look at the latest figures from the Australian Bureau of Statistics, and particularly a chart that I've got in front of me that takes us back over the last 10 years, looking at the various states and territories and what's happened with interstate migration, the net gains from interstate migration. And what's very clear is there a very strong pattern of uprise for Queensland, and in particular for southeast Queensland. Are you seeing, what signs of uplift in population are you seeing, Mark?
Yeah, we're just seeing, I guess the first thing we notice is that their primary source of inquiry is realestate.com, given that that's the sort of predominant and has been the predominant platform for advertising properties in southeast Queensland. And we've seen an increasing number of activity or inquiry coming through Domain, and that's predominantly coming through from people who are moving up from Sydney and Melbourne. And Queensland had some extremely good growth through population. I think it was around about 10 years ago. The numbers were around $1,500 a week when the oil and gas and mining boom was going on in Queensland. And that was one of the driving factors which improved rental prices and improved capital value in properties in the region. So, on the coalface, what we are seeing is applications from people interstate to rent our properties, which is confirmation that population growth and migration rate is improving in our market.
Yeah. The figures from the Bureau of Statistics, the latest figures, and these relate to last year, 2018, and we've also got figures from them sort of going back 10 years. But last year, Queensland was number one for gains from interstate migration by quite some margin. Queensland gained about 25,000 new residents. That's the net gain, means the difference between people leaving and people arriving. Victoria was next best with 14,000, and then very small gains for Tasmania and Australian Capital Territory. But the only two states that really had big gains from interstate migration were Queensland first by a wide margin, from Victoria second. And it's interesting to note that New South Wales actually had a net loss of 22,000 people. Western Australia was also a net loser. But I think what we're seeing is quite a lot of people are leaving Sydney for all sorts of reasons, including affordability and moving to southeast Queensland. Affordability and lifestyle being the prime drivers of that. But looking at the figures over the last several years, the trend is very strong for Queensland. Back in 2015, the net gain was only 7,000 people. In 2016, it was 12,000. In In 2017, there was 18,000, and then last year, 25,000. So there's a very strong pattern of uplift that more and more Queensland is gaining from net interstate migration, and more New South Wales is losing. So it's very clear what the trend is there. And what we know from other research is that about 90% of that new population into Queensland is actually going to Brisbane and southeast Queensland. That's what the figures show. So that's the first of a number of factors that leads us to have some strong confidence that the Brisbane property market is going to be a better performer moving forward.
Yeah, well, given supply and demand really ultimately at the end of the day dictates the price an investor can get for their property, the rent they can achieve. And if you've got a property which is particularly suited to interstate migrant or someone locally, then if they're competing for that property and there's not a lot available, then that justifies a small increase in rent. And we're also seeing, Terry, that I think, having been around in the industry for a long time, the majority of interstate migration sort of 5, 10, 15, 20 years ago was predominantly from, people who were, born in Australia and an Australian nationality, whereas we did get a little bit of international migration, but the interstate migration was predominantly from, Australians. Whereas now we're seeing a lot of international migration into Queensland as well. I'm not sure if you've got any of the numbers or the statistics there on that, but I have heard about it. I have read it. I haven't got anything in front of me here, but we are also near to top in the country for the international migration. And we're also seeing people from other nationalities migrate to Queensland from other states and capital territories, which they're following that trend of people, why holiday where you can live? And they're coming up here and renting our properties, which is, it's good because a lot of people come up here, they rent before they buy. People are realising, they might be living in a cold climate like Melbourne and prefer to live in a somewhat of subtropical climate like Queensland. You can enjoy the benefits of, ducking away on the weekend and going to the beach for around about, 7, 8, maybe 9 months of the year. Well, they're all attractive prospects for investors who are currently in the market or who are looking to get into the Brisbane market.
Yeah, I think what you're referring to traditionally has been the case for Queensland. Traditionally, Queensland has been the biggest gainer from population, interstate migration, for lifestyle and climate and affordability. That fell away a little bit over the last 10 years, but the figures from the Bureau of Statistics show that it's very clearly strongly on the way back. The last 4 years has each shown a big increase on the previous year, to the point where now Queensland is the biggest gainer, ahead of Victoria. Victoria has been the number one state for overall population growth, but the fact that Queensland's so far ahead of Victoria, which is in second place now, just emphasises how strongly that trend is now favouring southeast Queensland.
Yeah, it's exactly as I remember it. We had extremely strong 1,500 people a week, I think the number was, give or take. But that's a lot of the people, and one of the driving factors why we had a bit of a supply issue with the units. There was an undersupply originally in the Brisbane market with units, and the local government and the councils offered some stimulus packages to developers to develop hotels, for instance, was one of the primary things, because every time there was an event in Brisbane, like a rugby international game or anything of that nature, there were never enough hotels to accommodate the demand, and that sort of temporary undersupply was a temporary oversupply. But what we've seen is that with the increases in the rental yields, sort of confirmation that the market has absorbed that oversupply, and they're sort of give and take. Those returns are somewhat in line with the housing market, which is positive moving forward. And those properties, we're seeing the people move up from interstate and overseas and move into.
I think there's no doubt that the situation with vacancies and rents have improved a lot. We'll get to that a little bit later in the broadcast. One of the other key factors, as I see it, Mark, is infrastructure spending. As far as we're concerned, there are many reasons why Sydney and Melbourne had the booms they had, but probably at the top of the list has been that they've been spending, tens of billions of dollars on new infrastructure, particularly transport infrastructure, but also hospitals, schools, universities. And that's an enormous factor in creating the economic impetus that drives property markets. It creates economic activity, it creates jobs, and out of that comes demand for real estate. Now, Brisbane has been lagging in that factor in the last 5 or 6 years. But what we're now seeing is that just very much changing. I think this is a very significant factor that Brisbane, which has been lagging so far behind the two biggest cities on the infrastructure spend, is now very much starting to get on board. We've got a number of big projects happening now and others very, very close to getting underway.
Yeah, it's good to see. As you probably know, Brisbane was referred to for many years and possibly still as a big country town. And we've just one central hub being the CBD. But over the last sort of 5 years, up to 10 years, we've really seen these satellite hubs or business hubs start to develop. Now, these have been established and well known in the likes of Sydney and Melbourne for a long time, helping get people out of the CBD. And we've got areas like Toowong and Chermside and Cannon Hill that there's a huge amount of infrastructure being built around those areas with transport, in addition to the major ones like Queen's Wharf, Cross River Rail, the duplication of the airport, and they're all helping because rather than a distance from the CBD being measured as a key factor in buying an investment property, now investors are able to benefit from investing out in the suburbs in these areas where these business hubs and these satellite sort of hubs are developing, and there's a lot of infrastructure going in around them, and that's given their tenants the ability to live and work in an area without having to deal with the commute.
Yeah. So a number of very big projects are now getting underway in Brisbane that are going to drive, I think, the Brisbane economy, create jobs, economic activity, improve amenity. And out of all that, I'm expecting to be seeing an uplift in demand. We've got the Cross River Rail project, which is a happening thing, a multi-billion-dollar project in central Brisbane with new stations, locations like Roma Street, Albert Street, Woolloongabba, and an upgrade of the existing Dutton Park station. We've also got ongoing works on the Gateway Motorway, a very important arterial route for getting north and south in Brisbane to the airport and the seaport, and for people heading south to the Gold Coast, people heading north to the Sunshine Coast. There's been a recent $1 billion upgrade there completed, but there's another $1 billion upgrade that's now planning the next stage of it. So that's something that's just an ongoing rolling upgrades of the Gateway and Motorway. Each one seems to be $1 billion. Kingsford Smith Drive, very important arterial road in central Brisbane, a little bit north of the CBD, $650 million being spent there. And so it rolls on, $500 million being spent on an upgrade of Logan Hospital, the Brisbane Live project, $2.1 billion, and many other projects. And when you start to add all these, Brisbane Metro is $1 billion project as well, a little bit less forward and less advanced. Queen's Wharf, $3.6 billion casino, hotel and leisure development. So add all that up, it's a lot. It's we're well over $10 or $12 billion worth of infrastructure currently happening or soon to start.
Yeah, it's thanks for that, Terry, and it's good to see, because I guess to translate that into simple terms is that if you own an investment property, you're looking at purchasing an investment property which gets a benefit from that infrastructure, then naturally that means that you can typically achieve a little bit of a higher rental price for it and get a better yield on your investment. We are, with the growth that's forecast, I don't think that's going to happen all. You couldn't break that 3-year growth of roughly 2% up to say you'll get 7% per annum. It might take a while to ramp up and a little bit of time. But yeah, there's plenty of money being spent, and that's, two of the ducks lined up in a row, one being the interstate migration and or some international migration, combined with the local infrastructure the government and the councils are spending, benefits investors at the end of the day.
Yeah. And you mentioned a little bit earlier, Mark, that there's been the creation of hubs a little bit further out in suburban areas of Brisbane. And one of those places is the city of Ipswich in the southwest of the Brisbane metropolitan area. Very much a growth centre, affordable real estate, lots of big jobs nodes established out there and more being established. And one of the big infrastructure projects out there is the Ripley Town Centre, very much a new master plan community, but they're spending $1.5 billion just on the town centre as part of that big residential development. So that's an example, I think, of what you were talking about earlier.
Yeah, it's helping get people, keeping them in Ipswich and stopping them migrating into Brisbane or having to commute to Brisbane or vice versa. And one of the big things is the playgrounds has been all over the news in Brisbane recently. Developers spending upwards of $1 million on a playground to attract young families into the area. Just another indication, I think, that they've got confidence within the market, and unless there's some sort of global catastrophic event, that we should benefit from from all of this growth and the interest rate migration and the spending the government's doing.
Yeah. And one of the things that's improved a lot for Brisbane, I think this is something that the market has needed to happen before it could really move forward, is the situation with vacancy rates. Going back 12 or 18 months, vacancies were still a little bit higher in Brisbane, particularly in the inner city markets through apartment development, but we've seen a major improvement. And I imagine as someone in the property management business, Mark, you're very, very acutely aware of that factor.
Yeah, we are, Terry. When our owners aren't receiving money, we definitely know about it. And look, when they're not earning rents and we aren't earning an income either. So when our investors are hurting by vacant properties, as a business, we're hurting as well. And it is unfortunate. Sometimes these properties fall vacant at certain times of year when supply and demand is not in their favour. And at Bluestone, we have strategies around that which we adopt. For instance, we'll try and, if a lease end date is not in the optimum time of the year, we don't automatically go and put a new tenant in place on a 6 or 12-month lease. We might look at doing a 9 or a 15-month lease to try and get the property to become back into the peak cycle, which is sort of that January, February, March part of the year when you've got a huge amount of interstate migration, people on holidays taking the opportunity, all of the government services moving their workers around, plus the benefit of university. So, yeah.
Just to illustrate just how much the vacancy rate situation has improved in Brisbane, I'm just referring to figures that come in regularly from SQM Research, which is a good source of information about all manner of things to do with residential property around the country, but in particular vacancy rates. In December 2017, so just under 2 years ago, they had listed the Brisbane vacancy rate at 3.8%. February 2018, down to 3.4%. August 2018, just over a year ago, it was down to 2.8%, so now below that 3% benchmark. And the latest figure for August 2019, 2.5%. So the trend has been, over the last 1 to 2 years, very much steadily improving. And we've got to the point now where overall the Brisbane vacancy rate is 2.5%, which means it's well under that benchmark. And it's now in a position when your vacancy rate gets down that low, that's when you start to see rents starting to increase. And of course, there are specific areas of Brisbane where vacancies are tighter than that.
Yeah, it's definitely makes our job a lot easier when properties are easier to rent. There's a little bit more competition for them, and the rent, you're indicating to the investor that there may be the opportunity to put the rent up rather than the other way around to reduce it. We typically operate, luckily enough, the numbers that we run, Terry, we're actually running at around about half the Brisbane average of around about 1.2%, which is pretty good. But I did ask the question recently in relation to those, and some key of people reporting on vacancy rates outside and above the company you mentioned, and the likes of Domain, for instance, use a property being vacant for on average 3 weeks before, the changeover of tenancies before it credits to them as being a vacant property. But I think the days on market, 23 days on average for Brisbane for a rental property. But look, at the end of the day, the goal for the investor is traditionally there's not a lot of things people can do. If the property's in pretty good condition and in good nick, and it doesn't need any improvements made to it, there are some things investors can do to make the property more rentable. There are a number of key factors. You could look at doing professional photography, which may help you find a tenant sooner. You could look at putting air conditioning in. We've got a very hot climate here. Again, that might make the property more rentable, may not necessarily mean that you can achieve a higher rent, but it could reduce your days on market and your own vacancy rate as an investor. The final thing is an adjustment to the price. If you've got a property that's sitting vacant and has been empty for a number of weeks and there's nothing else you can really do to improve the property, then the only other way you could do it is potentially to make the property more attractive by reducing the rent. We quite often go through this scenario with investors. I made some notes here earlier that I was speaking to an investor that's had their property sitting vacant in an area of Brisbane, Toowong, and sort of supply and demand in that area is not in their favour at the moment. It's a 2-bed, 2-bath, 1-car unit, and currently there are 11 other properties on the market in their price bracket of 5 to 550. It had been advertised at 550,000. It's an area traditionally known for being very strong for university students as being your tenants. It also does attract some young professionals. But we roughly calculated if they rented it out at $520 a week for 52 weeks of the year, they would yield $27,040 as opposed to having it sit vacant for another month and renting it for 48 weeks by $550 at the same price. They'd only be yielding $26,400. The difference is $640, but yeah.
So that sounds like one of those markets in Brisbane that still has some vacancy, but you said earlier that the average vacancy rate across the properties that you manage is 1.2%, and that suggests a very, very tight market. When vacancies are that low, you generally would have tenants competing for properties.
That's correct. Yeah, we also have several strategies, Terry, that we adopt that some other agencies don't, to help us with that, with getting properties on the market nice and early, using professional photography, really well written descriptive text and catchy headings. And we also go over and above to open these properties up as much as we can during the week and on the weekends and provide a high level of customer service. All of that translates into a lower vacancy rate for our investors.
Yeah, okay. So with vacancies now down, generally speaking, of course, the generalised data tends to disguise the individual situations that exist in a big city, but the generalised data shows that the trend for Brisbane has been very much to contracting vacancies over the last 12 to 18 months. So we're now at a point where we're now across the board seeing rental rises. The generalised data, I've got some figures here, and perhaps after I talk about these, Mark, you can talk about something a little bit more specific at the coal face of the industry, but SQM Research and Domain have both recently published their latest rental reports for houses. SQM has Brisbane house rents up about 2.7%. Domain has Brisbane house rents up in annual terms 1.3%. Similar figures for apartments, rises of about 1.5%, 2.5% across the board. So that's the generalised data, the general situation across Brisbane. But down at a street level, Mark, there must be there's specific areas where vacancies are tighter than the average, and therefore we're probably getting better rental growth than that.
Yeah, that's right, Terry. There are areas for whatever reason. If I think houses are performing better than units because we have just been through that cycle where we did have some temporary oversupply within units within the inner city predominantly, but also within some of those hubs. Like there was a fair bit of unit development in the Toowong and Chermside areas, for instance, among other places, Mount Gravatt, Cannon Hill. I think there's a fair bit around Stones Corner, Kangaroo Point, the Valley, New Farm, Newstead. But that did, for many years, even many of our investors didn't think that the oversupply of units would have affected these supply and demand and yield and vacancy rates on houses out in the suburbs, but it did because these developers and investors were, offering extremely attractive packages to tenants who would traditionally rent a house out in the suburbs to actually come and rent a unit in the inner city, give them a month's rent free and a colour plasma TV, for instance. So it's been an extremely tough market to work in, but you're right. We've seen, that's a 2 to 2.5% increase within the houses translates to around about an extra $10 a week on average. Not a huge amount, but again, it's extremely positive after many of our investors have had neutral, if not negative, rental returns over the last 5+ years. So, and I made a note here before, and on a lot of the things we're talking about, Terry, I think that a number of or a vast majority of our investors are from interstate, from predominantly Sydney and Melbourne. And it's difficult for them within their own local market to have seen so much positivity over that period within their backyard. And out up here in Queensland, where their investment property is, we haven't been seeing the same increases in positivity within the market. And that's been a challenging thing for us because they aren't understanding why isn't the same thing happening in Brisbane as it is in Sydney or Melbourne.
But you must be seeing signs that now it's starting to happen, particularly with rentals, with vacancies come down. Have you got some recent instances of good increases in rentals that's starting to reflect the new situation?
Yeah, absolutely. We picked up some properties in an acquisition recently and noticed that there had been a number of properties that had been rented under market value. And on those particular portfolio properties, we've been seeing $20 to $30 a week increases. And then they may have been under rented for a number of reasons. But look, at the end of the day, we've increased those people's yields by 4 to 6%. Needless to say, they're extremely happy investors. But generally speaking, around about that 2.5% increase for our houses, and around 1.5, sort of about $5 to $7 a week on the units that we manage. So much so that we're implementing some systems and procedures to help our investors maximise on the growth that Queensland's forecast to get. So we've had a couple of cases where some of our good tenants have asked for 2 and 3 year leases, and we're ensuring for our investors that we're putting some incremental increases in the rent through those long-term lease periods. And that's something that every investor in Brisbane should be, if we're not looking after you and you have your property managed by somebody else, ensure that on a 12-month lease, you have the opportunity after 6 months, if it's warranted and can be justified, to get an increase in the rent, even if it's only $5, $10 a week, for instance. $520 extra a year in your back pocket makes a big difference.
Yeah. So what we know from history is that when markets are moving into upturn, what we generally see happen first is vacancies drop and rents start to rise, and then we see prices reacting to that. And we're now starting to see the first signs, again with the generalised data, that Brisbane prices across the board are starting to rise. Not massively as yet, but certainly heading in that direction. The most recent monthly report from CoreLogic shows that the average situation for Brisbane was a small increase in the month of September, and also for the September quarter for houses, and also a 1% increase in the September quarter for apartments. Eskom Research's latest figures show that Brisbane house prices, on average, again very generalised, are up about 2.5% compared to 12 months ago. And what's significant, I think, for both houses and units, their weekly index and their monthly index, the latest month, show quite good rises for Brisbane, almost 1% for houses in the most recent month. And you annualise that, we're starting to talk about quite strong growth in prices. So it's to a certain extent reflecting the trends we're seeing in the bigger cities, where that previous decline in their prices is turning around, and the short-term data shows that their prices are rising again. Brisbane didn't actually experience any price decline across the board. It's just been very steady, but now we're seeing evidence that prices are starting to rise on the back of all those improvements. What are you seeing at street level, Mark?
Yeah, thanks, Terry. What we've seen is that, for instance, about 12 of our owners went to the market last year, and only one of them was lucky enough to be able to get a sale. We've seen equally as many properties come onto the market within the last sort of 6 months, and the vast majority of those investors have been able to get a sale away and sort of cut their teeth, if not make a little bit of money on their original purchase price. But yeah, it's definitely translating into increases for people who own properties in the Brisbane area. I think those rises aren't anything significant. However, it is positivity within the market that is building from strength to strength, day to day, week to week. And as we go on, we will see the market improve and gather momentum. With a number of people I speak to, and they come to me and say, should I be thinking about selling my property now? Or, I'm thinking about selling. And our general sort of rhetoric is that unless the bank's knocking at the door, Terry, we wouldn't recommend that you sell. The market is forecast and predicted from several key economists and market experts that we're going to see some substantial yet sustainable capital growth of around that sort of 20, 21, 22% over the next 3 years. Yeah. And, I think as the title of the webinar was that, why would you be selling a property? And some of these people have been maybe told to sell in Brisbane and buy elsewhere. And I find that a little bit strange when Brisbane is now predicted to be the sort of probably place to invest in Australia to maximise returns. So it just doesn't make sense to me to sell a property in Brisbane and go and buy somewhere else in Australia. If circumstances prevail and you have to sell the investment property for whatever reason, then so be it. But I know personally, knowing what I know about real estate and how the market works, that if I owned a property in the Brisbane area, I certainly wouldn't be selling it. In fact, I'd be trying to buy another property and benefit from this massive uplift that we're about to see over the next couple of years.
Yeah. So the price data I just gave is very generalised, and that's generally what we get in the media from the research companies, but it's always very instructive to look more at street level. We analyse things suburb by suburb, and we find that across Brisbane there are outperformers, and of course it's the goal of every investor to find those outperformers. But just looking at some of the examples, whereas the generalised data suggests growth of just 1 or 2% across the board in Brisbane prices in the last 12 months, but individual suburbs on the north side of Brisbane, suburbs like in that sort of middle ring north side, like Nudgee, Northgate, Geebung, are all places where their median prices have increased 7, 8, 9 or more percent. Northgate's actually up 16% in the last 12 months. A little bit further north, up at the Redcliffe Peninsula, Scarborough and Woody Point, two suburbs that have grown in double digits, sort of 10, 11%. And there are examples like that to be found across Brisbane. I'm finding, particularly at the top end, the $1 million suburbs, and that's also a signal that the market may be poised to rise, because usually it's the top end that moves first, and the other sectors of the market tend to follow on later in some kind of ripple effect. But $1 million suburbs in Brisbane have had good growth in the last 12 months, include Auchenflower, which is up 19%, Balmoral up 16%, and then suburbs such as West End, Bulimba, Clayfield, Hamilton, and New Farm have had more moderate rises, sort of 4, 5, 6, 7% in the last 12 months. But certainly these areas are all outperforming those generalised average figures. For houses, Wollongubba's up 8%, Corinda's up 11%, Toowong is up 9%. So across Brisbane, if you look around, you find that there are outperformers, and that's always the case. And it's always, I think, a little bit misleading when media publishes those generalised numbers. 1 or 2% for Brisbane, it suggests there's no growth to be found. But when you look a little bit deeper, you find, well, actually, there is growth happening in Brisbane right now, and that's forecast to perhaps be more so. And we'll get to that in a moment, Mark.
Yeah, we've seen with that, Terry, at the back of that information, that's interesting that within the last couple of months, we've seen the interstate buyers agents come back into the market looking for positive cash flow properties for interstate investors. And they're looking for areas which are suburbs that show good potential for capital growth and don't have any developments within the surrounding area where the oversupply is going to affect the capital value and the rental value on their properties. So that's probably in line with the research and the location data that you provide. You're looking for those similar sorts of suburbs that have got several key factors and contributing factors, and everything's sort of pointing in the right direction for investors.
Yeah. So moving on from the situation with prices as it currently exists, it's interesting to look at what's been forecast by some of the major forecasters, and we're regularly seeing some of the major organisations publishing their predictions for major markets around the country. Property Investment Professionals of Australia, PIPA, does regular surveys. They've recently published their Property Investor Sentiment Survey, and it shows a number of interesting things. Firstly, across the board, showing that 82% of those surveyed believe that now's a good time to be getting into residential property as investors, generally speaking, and also about half say they're planning to buy investment property in the next 6 to 12 months. But even more interesting in regards to this particular discussion is that when asked, where they're going to target their investor buying, Brisbane is the number one pick for property investors around Australia. 44% say they're going to target Brisbane, 27% say Melbourne, and just 14% say Sydney. So Brisbane very much the leader in terms of what investors are thinking, according to that survey from PIPA.
Yeah, and that means what I read into that, Terry, is that if you currently own an investment property, it's going to go up in value, and if you're looking to buy into the market, the longer you take, the more you're going to pay.
Yep, and just following on from that, so the PIPA survey suggests that investors are becoming increasingly active, and that's actually showing up in the latest monthly lending figures. Up until that point, most of the uplift we've been seeing in markets, particularly in the biggest cities, was being driven by owner-occupier buyers, but the latest lending figures show for the first time that there's been an uplift in loans to investors, which suggests that investors are starting to get active again. And certainly that PIPA survey suggests that investors are certainly planning to get active again, and we're starting to see the first signs that that's happening. And that survey also shows that Brisbane's the prime target of the major cities for investors, according to that survey. But that would tend to correlate with what was published quite recently by QBE. They put out regular reports where they make forecasts for what they see happening with prices in the major cities for the next 3 years, based on data that they get from BIS Oxford Economics. And their latest report has Brisbane leading on capital growth for the next 3 years. Brisbane first, Adelaide second, Perth and Melbourne joint third, but Brisbane actually first by quite a wide margin, and that's very encouraging for Brisbane owners or people thinking of getting into the market. Now they're forecasting a 20% rise for Brisbane, and then quite a big gap to second place, 11% increase for Adelaide. So certainly the forecasts, building on all that data we presented previously about population and infrastructure, improved vacancies, improved rental growth performance, we're seeing the forecast suggesting that Brisbane's going to lead capital city Australia on price growth for the next 3 years.
Yeah, it's good news, and as we've said earlier, that is on the coalface. We are seeing the increases in demand for these properties, the investment properties, and we are seeing investors getting a slightly better yield than they were, and generally just that positivity and the sentiment coming back into the market. Is going to makes it a lot easier to own an investment property in this region, and a lot easier for us to manage it as well.
Okay, so we're just coming up to 45 minutes. We like to, as much as possible, allow the final 10 or 15 minutes to answer your questions. So people out there watching and listening, please just type your questions into either the Q&A panel or the chat panel. Either one's as good as the other. We do have some questions here now, so we might turn our attention to some of those, Mark. Daniel's asking about Cannon Hill. I don't know how familiar you are with that market. He's got a 2-bedroom unit there, and he's interested in our views on prospects for markets like that, given that we've had recently in Brisbane oversupply in the union market? Certainly, I think there's been big improvement in that recently, Mark.
Yeah, that area, Daniel, is one that it's sort of one of those hubs. It's not probably quite the same as Chermside or Toowong. Doesn't have a university like Toowong has a number of universities sort of in the proximity. And however, it was one of those areas earmarked by council and the government for where they allowed more unit development to go through. And besides the direct competition that, I guess the direct competition of units being built in that immediate area posed, it also was affected by the general oversupply in the greater Brisbane area and those other hubs plus within the sort of CBD. So, those properties did struggle and investors didn't see particularly good returns on investments. But as we said earlier, Daniel, that the fact that we are seeing some growth within the yield for unit investors in Brisbane is confirmation that for the best part, the market has absorbed that oversupply and supply and demand is coming back into your favour. So we're seeing, albeit small, there's those sort of $5 to $10 a week increases on those properties in that area. And that should grow from strength to strength as we see a little bit more time pass by.
Okay. Mark, Des is asking a similar type of question about units in Lutwyche. It's a little bit closer to the centre of the city. What are your thoughts on that particular market?
Yeah, that's quite similar or reasonably similar to the Cannon Hill and any of those other sort of out of the city hubs, in that it also was disadvantaged by a lot of sort of development in the local area within units and competition, and also within close proximity to other parts, Newstead, New Farm, the Valley, and some of the suburbs in West Brisbane, and for instance, Toowong. But again, most of the development is almost finished. There's little few or very few projects being undertaken and that have been sold and rented. And we are seeing supply and demand come back in favour of the investor in those areas.
And I think as a general comment also, what we're seeing across Australia is increasing commentary right up at the level of the Reserve Bank and many other places as well, becoming a little bit concerned that because we had that oversupply factor in some of the major cities, that construction has reduced a lot. And there's now concern that we're actually going to have a shortage of real estate across Australia, and I think we might be starting to see the beginnings of that playing out across Brisbane, because there was previously an oversupply. Developers stopped building, and of course it takes a long time for projects of that, major projects to get from planning to construction to completion. So I think we're going to actually be going through a phase in Brisbane and in some of the other major cities of Australia where we're actually going to have a shortage of properties. In fact, apart from Sydney, all the major capital cities have vacancy rates below 3%, and some of them are down towards 1% now. So I think, generally speaking, I think we're coming into a time in Brisbane and elsewhere where investor owners, landlords are going to have the upper hand in the rental market.
Yeah, that's right. And while it's only a $5 or $10 increase, it doesn't sound like much. If you haven't owned a property in Brisbane over the last 5 to 10 years, you wouldn't understand that's a really positive news, because we've seen rental prices sort of creeping backwards for most of that period. And, people have probably, on average, maybe received a 10% lower yield than when they first bought the property. So to see that it's turned around and heading back in the other direction is extremely positive news for any investors currently in the market and investors looking to get into the Brisbane market.
Okay, Alison's asking a question about the Hurston area. Is that something that pops across your radar screen, Mark, in your day-to-day activities?
Yeah, Hurston's just the neighbouring suburb to where our office is, so we're fairly familiar with it, Terry and Kirsten. It's a good area, I believe. There's not a lot of development, right in the Hurston area in the way of residential apartments or properties. I think there's not a lot of opportunity for greenfield development, but it does benefit from an inner city location and close proximity to the hospital. I think the best thing for Hurston, and we've also got Kelvin Grove, we manage a lot of properties is that another one of these infrastructure projects which has recently been announced and not really on the radar generally is the redevelopment of the Victoria Park Council golf course. It's going to be transformed into a 50-hectare public use parkland with a lot of mixed spaces. And I'm a big believer in thinking that anybody that owns a property in, say, Hurston and Kelvin Grove is going to benefit extremely well over the next coming years as that development gets closer to being developed and or completion, that we'll see prices in those suburbs skyrocket.
Yeah, I mean, that's a big project. There's something similar happening in the middle of the Sunshine Coast in Maroochydore, where a former golf course has been repurposed, creating a CBD in effect for the Sunshine Coast. It sounds like something quite similar is happening there in that Hurston area. That's a big area of land, and the redevelopment of it for public benefit is going to have a big impact on the market there.
I think Terry, you might be able to touch on this, but as far as I'm aware, also it's been one of the underperforming suburbs for capital growth compared to surrounding suburbs. So it's really poised for exponential growth, I believe. But, you could add on that if anyone was interested. I'm sure one of your reports would cover that off pretty well.
Yeah, absolutely. A couple of questions about Logan Lee and the Logan City area generally. Do you have any particular thoughts about that one, Mark?
Yeah, look, I'd disclaim it in that we can't sort of offer direct investment advice, but what I can tell you is, having managed a number of properties, I think we have about 70 properties in the portfolio down in that Logan area. They have struggled to perform traditionally. A lot of people were sold into those areas. The third-party agents who were selling them or providing advice thought that would perform better than they would. Unfortunately, they haven't shown particularly good yields, and that's for capital gains and or rental yields. But we are seeing some slow improvements in that area. Sort of the ripple in the pond effect, as you mentioned earlier, that the market sort of turns around on the top end, being those $1 million properties. We see significant improvements in that end of the market, and that takes time to filter through. So while we haven't seen, those sort of $5 or $10 a week increases down in the Logan area, we are seeing a lot more activity and positivity around the properties where we've had potentially a property sitting empty for 2 or 3 weeks. To find a tenant, we are finding that we can turn those over in sort of 1 to 2 weeks, and without a reduction in the rent to make the property more appealing to tenants. So I think that give it time. It'll take a little bit longer for the waves to ripple out to the edge of the pond, being those outer ring suburbs or into the next shires, like to the north Moreton and to the south Logan. But I can't remember the name of that person that asked that question. Sorry, but look, if you're in that sort of Logan area, I'd just sort of sit tight. You will, the benefit will get to you. It'll just take a little bit longer than it does if you're in closer to the city.
Okay, now we have a question from Nicola, which I guess really speaks to the heart of the theme of today's presentation. And she says she's wondering about Mitchelton. I have a 1-bedroom unit there for the last 6 years, thinking about selling. What would we suggest? So she Nicola may be one of those people who feels it hasn't performed in recent years and maybe thinking of selling out. But I think very much the theme today, Mark, is that now is not the time to do that because we're coming into better times.
Yeah, absolutely. Look, there's not a lot of units in Mitchelton. It has suffered from the oversupply for the greater Brisbane area. But if you look at that as a localised area, for anyone living in that area that wants to rent, they don't have a lot of options around that sort of 1 or 2 bedroom market, as we've seen that oversupply dry up in the areas close to Mitchelton. That has affected your yields. Nicola, I think if you sit tight, and again, we can't sort of provide direct financial advice, but the independent commentary that's out there in the forecast for the Brisbane market, if you look at getting a 6% increase per annum, or 7% over 3 years, translating to sort of 21, 22%. That'll also apply to your yield. There is a direct correlation between the two. The rental yield typically can lag behind a little bit, but no, I couldn't see why you would sell and forego that increase over the next 3 years at least. And who knows if the market grows from strength to strength and we don't see some sort of a global catastrophe happen, then there's nothing to say that we won't see this sustainable growth go into the 4 and 5 year period. And with any luck, see gains of around 30%.
Okay, we've got a question about the pros and cons of investing close to the CBD versus perhaps going to some of the out areas like around Ipswich, or there's also a question about the prospects for the Moreton Bay region up in the north of Brisbane. What are your thoughts about that, Mark?
Yeah, it's a good question. I find that now that Ipswich has really taken off and there's a lot of big infrastructure projects out there and a lot of these satellite cities like Springfield and Ripley taking off, that those areas have really come into their own. And traditionally Brisbane's sort of been a fairly tight or regarded as, the pinnacle for the investment within the area. That, as I said before, that the government tipping a lot of money into these outer line areas to try and create satellite cities in their own right, that has meant that investors have got a really good excuse to go and buy out there. In particular, that Moreton region, I know up that area, I've heard people talk about it as the Golden Triangle, might have even been yourself, Terry, but it's already seen higher than average returns. And that at the end of the day, it really comes down to your own personal preferences. And if you make a decision based on the facts and the numbers as opposed to an emotional decision, then it's hard to go wrong.
Yeah, I think certainly Ipswich offers a lot to investor buyers because it's very affordable. There's lots of very major jobs nodes there, and that's increasingly the case. A lot of businesses that have big industrial commercial space requirements often head out towards Ipswich because the land is cheaper out there and the transport links are very good. So it's very important. Proximity to jobs nodes is a major factor by which people decide where they're going to either buy or rent property. They like to be close to where they work if they can. So if they can buy affordably close to where they work, that ticks a lot of boxes for buyers. So Ipswich offers that. Similarly, Moreton Bay region up in the northern suburbs of Brisbane, high level of affordability, good infrastructure, proximity to some very major jobs nodes. Most people don't work in the CBDs. Contrary to popular belief, probably the biggest jobs node in Brisbane is the Australian Trade Coast precinct, which surrounds Brisbane Airport and the Port of Brisbane, which are very close to one another. Those thinking about buying up in that Moreton Bay local government area in the north of Brisbane, be mindful there's a new university campus well under construction there to be completed to open for the new academic year starting in February next year. So that's a factor that's going to drive big demand and property markets up around sort of Launton and Petrie in the northern suburbs of Brisbane.
They're really good points, Terry. And I actually think the disparity between Brisbane and those, say, Moreton and the Ipswich areas and Logan, for instance, will shrink. If I don't know exactly what the difference is in values in the median prices, but I think because of the infrastructure that's been put into those areas that we will see, and there's been a lack of infrastructure. Let's face it. Like I said, 20 years ago, Brisbane was a big country town, and now it's a thriving metropolis, very, very multicultural. We've got all these key factors like interstate migration, international migration, infrastructure spend. Jobs is probably the only thing that really needs to come into that mix with the volume. So if the local government, could stimulate some oil and mining and gas and get some more jobs going through more infrastructure, then we will see the price gap between Brisbane and the outer line areas reduce.
Yeah. We just have a question of clarification. One of the listeners asking about those figures I mentioned about growth rates, 20% for Brisbane, etc., and 6 or 7% in other cities. those figures were the predictions of QBE in their recent report predicting the next 3 years for the major cities, based on research from BIS Oxford Economics. So they're predicting on average Brisbane prices to grow 20% over the next 3 years, Adelaide 11%. I tend to think that those sorts of forecasters are always very conservative with their forecasts. A prosperous market, like we're expecting Brisbane to be over the next 2 to 3 years, we're probably going to do better than that, I would suggest. But that certainly is the forecast. That's their figure, and the total growth in prices 20% for Brisbane over the next 3 years on average. Look, we've just tipped over the hour mark, so it's probably getting towards the point where we should wrap up the broadcast. I thought it might be a good idea. We've just got a question from Nadeem here, which is more of a property management question. So I thought perhaps we could end on that. If I could put this question to you, Mark, and you could perhaps share your screen again and just talk about the special offer that you have for watchers and listeners, and also how people can contact you if they want to follow up. The question from Mardeem is, do you manage dual occupancy properties, and how do they perform in terms of rental? So I'll just hand that one over to you, and perhaps you could then sort of finish off with your offer and contact details.
Hey, thanks, Terry. And that was Dean, I think, that you mentioned, asked that question about the dual occupancy. Yes, we do. And I guess the easiest way to put it is I think they roughly should return around about, say, 6%. Sometimes they can get higher, sometimes a little bit less. But, if you look at that compared to, houses at 4.5 and units at 5%, it's a considerable difference. There's a fairly big jump between 4.5 and 6%, and even between 5 and 6%. That's sort of 20-25% increase. So they can prove to be a very good investment choice. Unfortunately, the Brisbane City Council doesn't allow them, and which is why they have been sort of pushed into the Moreton area and Ipswich, I believe. But look, certainly it's again, it can be an affordability thing, because the way to answer that question before was that some people are forced to invest in Ipswich or Moreton because of it's just simply more affordable for them. Dual occupancies typically, you have to have a higher outlay, but it does mean that you do typically get a better return. And one of the key things, I think, is that you would normally have a 1-bedroom unit and a 3-bedroom house combined together. And the old Fonzie flat is coming back. We're seeing a lot of those where you got a 3-bedroom house and above the garage. Fonzie from the TV show Happy Days, I think it was, that these units are becoming hugely popular, where you can not only live in the downstairs area and rent out the 1-bedroom unit above the garage, that you can invest both of them out. And I think it's a wise choice, a good investment if you can afford it.
Okay, thanks for that, Mark. So if we could just perhaps share your screen again and go to the slide, today's offer and your contact details, just by way of wrapping up the today's broadcast.
I'll just get through this for you guys. Bear with me for a second. So thanks, Terry. Today, just for the attendees of the webinar, we've got a special offer. It's a complimentary or free rental health check. It's a consultation where we do a diagnostic on your rental property and check the sort of 5 key factors in relation to it. And I'll just go through those here now. We've got a rental review, check if you're getting the highest possible rent. A tenancy review, just check to see that your agent has you protected under the laws and governing our industry. Routine inspection review, we'll thoroughly check your last routine inspection report, make sure it includes detailed photos, just check to see if you've got a good insurance covering the property, and also just check to see if you are getting the best deal from your agent. Now, that's normally valued at $495, but we're providing that to the attendees of the webinar today absolutely free. In addition to that, we've also happy to share with your listeners, Terry, or our listeners today, the cheat sheet from the last webinar we did, which is questions to ask your property manager, or learn how to choose a property manager and learn the questions they don't want you to ask. So to book that health check and or to receive the complimentary cheat sheet, there's my email address there, mshorrock@bluestonepm.com.au. And I've got some additional contact details on the next page here. If it's easier for you to call, text or email, I can be contacted on 0439 979 095 or at that email. Happy to address any questions. If we didn't get to your questions today, I did see one there from Sam on Pelican Waters that Terry's probably better to answer than myself. But if we didn't get you the questions today, then please call, text or email them through and be happy to address them for you as soon as possible. Thanks, Terry.
Okay, thank you for that, Mark. And Tara, and we've actually had quite a lot of questions today, more so than we normally get at a webinar, which is encouraging. It would tend to suggest that we've got plenty of people out there who have been very engaged with the broadcast and are very interested in the Brisbane market. We didn't get to all of them. Sam, we're sorry we didn't answer your question about Pelican Waters. It's actually outside of Brisbane on the Sunshine Coast. If you'd like to drop me an email, ryder@hotspotting.com.au, and I'll be happy to have a bit of a chat to you about that market. And one or two others we didn't get to because we've run out of time. But anybody wants to follow up and ask those questions or just to communicate with Mark from Bluestone about the Brisbane investment market, about property management issues, the contact details were on the screen just a moment ago, and I'm sure Mark will be happy to hear from you and to have a discussion about whatever your area of greatest interest is. So thanks everyone for your participation. Thank you, Mark from Bluestone, for participating today. I think it's been a great webinar. I think Brisbane is very much the coming market amongst the capital cities, and there's been a high level of interest in today's broadcast, I think, for that reason. People like the contact details for Mark and Bluestone on the screen now, so if you'd like to follow up, ask further questions or take advantage of that special offer, the health check, please do so. So thank you, Mark. Thank you, everyone, for listening. This is Terry Ryder from Hotspotting signing off. Let's do it again soon.